Ticker symbol VOO or VOO, the Vanguard S&P 500 ETF, is what I would consider one of the best, highest quality buy and hold forever dividend growth style ETFs, especially for newer investors. Now, why is this the case? Well, where do we even start? Maybe the fact that the expense ratio is just 0.03%, so it's basically free to hold on to, which is honestly pretty rare to find an ETF even that cheap across the entire market. Not to mention, VOO invests in stocks of the S&P 500 index, which are of course the 500 largest companies in the US and some of the best companies across the entire world. But along with that, VOO has consistently went up over time over the long term and consistently paid dividends every single quarter, which for the most part have only been getting larger and larger over time. But in this video specifically, we are going to go over VOO, talk about some of the most important aspects to know about if you are considering investing into it and or if you are a dividend growth investor. Then later on, I'm going to show you the math behind what an investor could expect long term by just investing $10 per day, yes, just $10 per day into a super high quality ETF like this one. So if you have an interest in building wealth long term through growth and of course dividends over time, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So like we sort of talked about, this ETF is pretty straightforward. It invests in the S&P 500, is super cheap to own, and it says right here in the product summary, goal is to closely track the index's return, which is considered a gauge of the overall US stock returns. And honestly, if you've been investing for a few years, you know very well that it's very, very tough to beat VOO, to outperform it, because it's very, very tough to outperform the S&P 500. Now, I'm not saying that some stock pickers, especially maybe some of you guys watching my video, I'm sure you guys are very smart, and maybe you do have some holdings that are beating the S&P, but all I know is it's very, very tough to do. Now, looking at VOO's performance over time, this is just price return. We're talking 25.3% over the last year, but most importantly, longer term. Over the last 5 years, price return alone, 74.03%, and over the last 10 years, almost 170%. Now, this is exactly what you want to see if you are a long-term investor. You don't mind some dips and valleys, some opportunities to buy more shares of whatever you're buying into a little bit cheaper. But if and when you see a stock or ETF consistently over time moving up into the right, hitting more and more all-time highs, that's an investment vehicle that can potentially build some massive, massive wealth. And that's especially why I think for newer investors that are just getting their feet wet, I think that investing into something like VOO, DGRO, DGRW, or of course my individual favorite SHD are great long-term buy and hold forever ETFs that are pretty much for the most part over time going to outperform most other portfolios. And it's also something that I wish I would have done when I first started investing. I stupidly bought a bunch of different single stocks. Yes, I thought I was a stock picker from day one, and I definitely got burned a few times because of it. Now, as far as VOO's holdings, it doesn't really pay to go through them. We know what they are. It's the S&P 500, the top holdings being things like Microsoft, Apple, Nvidia, etc., etc. Yes, we know all these companies. Yes, these companies are absolute growth monsters. And most of these companies will probably keep growing for many, many years from now. The next thing to keep in mind when it comes to VOO is the fact that, of course, it does also pay a dividend. This ETF does have around a 1.4% trailing 12-month dividend. But most importantly, especially for those income-focused investors like myself, the dividend, although small, has gotten bigger and bigger over time. We're talking around a 5 to 6% increase on average over the last 3 years, around a 4.6% over the last 5 years, and the last 10 years around 7%. So this ETF has not only kept on going up in price over time, which it definitely has, but on top of that, this ETF also has paid investors more and more, which again, for investors that like cash flow every quarter, this is also going to be substantial, especially as over time, you gather more and more shares of VOO in your portfolio. Now, there's definitely a reason on why a lot of these high quality dividend growth style ETFs like VOO, like SHD, like DGRO, like all the ones you hear about, there's a reason why they're so popular, and there's a reason why so many investors put their hard-earned money into them. And that's because there's a handful of high quality ETFs that have consistently given investors massive returns long term, and VOO, at least historically, is definitely one of them. Now, for this video's example, like we said, we are going to be showing you exactly what your portfolio could look like in the future by buying just $10 per day every single day, which again, more or less is probably something most of us can afford. And even though it's just $10 per day, you are going to see what the power of compounding can do to a small portfolio over time. Now, just to get everything set up, this portfolio is going to be a $10,000 portfolio off top. Of course, you can plug in your own numbers on one of these dividend calculators and see what things are going to look like for you, but $10,000 off top. And then we're going to have $3,650 of annual contribution because, of course, there's 365 days in a year times 10. The initial annual dividend yield is 1.4. The expected annual dividend amount increase over the last 10 years was around 7. And expected annual share price appreciation. This is hard because certain years VOO has went up significantly more than this, but let's just go with 8%, see where we land. The distribution is going to be quarterly for VOO, of course, and dividend reinvestment is going to be turned on. So this investor's portfolio, along with that $10 per day contribution, is going to also have the quarterly dividends buy more shares of VOO over time. So the numbers are in, and you're going to see the magic of compounding take place here. So year number one, a $10,000 portfolio earns $140 per year in dividends, and of course after the principal increase after the annual contribution. By year number two, we're at $14,500. By year number five, just by adding that $10 per day into this portfolio went from $10,000 to 5 years later $31,000 already, and over $419 per year in dividends. Now by year number 10, this portfolio is already to $70,000 by just adding $10 per day every single day. By year number 15, $129 plus $1,000 and $1,600 per year in dividends. Now, over the years, as VOO continues to move up in price and continues, of course, in theory, to pay you more and more in dividends, by year number 20, we're at $222,000 in principal. So this portfolio that started at $10,000 by just adding $10 per day is already surpassed $220,000 in principal. Now, all the way at the bottom, 30 years in, let's say, for example, you are a younger investor, this portfolio would almost be at $580,000, or by the end of that year, we'd be talking $633,000, all that started with a $10,000 investment, and of course that $10 per day into VOO. Now there's definitely other super high quality dividend growth ETFs out there that I personally also have in my portfolio, but I do think, especially for those newer dividend growth investors, if you want to build a portfolio long term, and if you don't have all that much money to work with, if your cash balance is a little bit slim, try to look into some of these dividend growth ETFs that not only pay you dividends every quarter, but also have grown significantly over time, along with paying more and more in dividends as the years go on. Because in my opinion, especially for a newer investor just getting their feet wet, there's no reason not to do this. Building a foundation in your portfolio with something like VOO or something comparable, of course it does not have to be VOO, but something along these lines is going to give your portfolio, in my opinion, a massive foundation that is most likely going to bring you exactly where you want to be later on, especially towards retirement. Not to mention, of course, if you are an investor that maybe has a little bit more cash on hand, let's say you were able to add $20 per day on average. And this is the fun thing about these dividend calculators. You can sort of mess around with the numbers and see where you land. So if you added, let's say, $20 per day, this portfolio by the end of 30 years would be surpassing $1.1 million and close to $11,000 per year in dividends. So it just goes to show that there's no excuse for the most part for any younger dividend growth investor to not build a massive monster portfolio later on. If you currently are building out a long-term dividend growth style portfolio, which ETF are you currently using as your foundational position? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.